Got it. Okay. So, yes. I'm gonna mute this first. Live. Got it. Okay. So, okay, good. All right. So when doing binary options, I have a checklist of things that I need to do. The first thing is I have to check the news. Let me open this.
Okay.
Right. So to check the news, I go to forexfactory.com. Why am I not seeing it right now? That's smaller. Okay, here we go. I go to forexfactory.com and I will copy and paste it in the chat, just in case you want to pull that. Paste, there we go. And looking at Forex Factory, we have the date. Today is Wednesday, January 5th. Then the time, then the currency, and the impact. Now, there are three main colors that you pay attention to, and we just so happen to have all three here right now. So the yellow folder, that's low impact news. Red folder is high impact news. Orange folder is medium impact. Now, the yellow folder, if I see that there is that color folder when I'm going to trade, right now it's after 11 Eastern Standard Time. I'm on the East Coast. So we're here. There's nothing going on here. But let's say we had decided to trade at, say, 8 o'clock, right? At 8 o'clock, there was no folder, but by 8:15, there's this red folder. So I know that I would just decide not to trade at all for that hour, because when there's a red folder, it's the impact is really great, and the US dollar seems to be supreme. I'm not hating on anybody else out there, but the US dollar, it seems to really affect everything. So if I see that there is news on the US dollar, I'm just not going to trade for an hour or two. So I wouldn't bother until, say, 10 o'clock because of this. Now, if it was a red folder on any other currency, I would still trade. I just wouldn't trade that currency. So if it had been the euro, for instance, that had a red folder around 8 o'clock, I wouldn't trade euro during that session, but nothing else would be off limits. Now, a yellow folder, for me, I don't mind trading currencies that have news if it's the yellow folder. I just may watch it a little. The orange folder, that's medium impact. So if I see that there's news on anything with an orange folder, we have the Canadian dollar at 8:30 a.m. that occurred, I know that I'm going to reduce my risk. So now I'm talking about risk. When taking trades, you want to risk 1, 2, or 3% of your account. 1% is if you're really conservative, 2% if you're moderate, 3% if you're an aggressive trader. Now, as someone trading for the first time as a newbie, you would want to be doing 1%, low risk, right? So when there's an orange folder, whatever my risk typically is, I'm going to cut that in half. So if I'm a 1%er, I'm going to drop it down to half of that. Are you following so far?
Yes.
Okay, awesome. So Forex Factory, that's the news. It tells me what I'm not going to trade, right? But then I want to decide what I will trade. So then I'm going to go to FinViz, and this is going to give me the volume or the strength of the currency. That's finviz.com. Let me go ahead and copy that, and I'll drop that in the chat for you as well. Paste. There we have it. So When you look at finviz.com, you're going to see the currencies in this bar from strongest all the way to the weakest, right? So here we see that the euro is the strongest and the Canadian is the weakest all the way to the side, and everything falling in between. Now, trading currencies, it's one currency versus the other. Say we're going to trade Euro USD, right? With that pair, Euro is the first currency or the base, USD is the second currency or the quote. When the base or one is stronger than the quote or two, we're looking for bullish ideas. We think price is going to be moving up. So we would be looking to buy the market. On the flip side, if we have another currency pair, say USD JPY, so the US dollar is now the base because it's the first currency in the pair, and JPY or the Japanese yen is the quote being the second, right? When the base is weaker than the quote, we're looking for sells. So Euro USD, we'd want to take that for a buy or a bullish idea or a call, right? And USD JPY, USD being to the right, it's the weaker of the two. I'd be looking for bearish ideas. I'd be looking for a put, or I'd be looking for a sell. Make sense?
Yeah.
Okay. So once we've decided that, then we want to do our analysis so we can get into the market. So to do the analysis, I use tradingview.com. And TradingView is a free site, but there's a paid version if you want to upgrade. The paid version gives you added features. Let me see if my phone keeps going off. Oh, okay. Never mind. All right. So TradingView, if you have a Google account, a Gmail, you can simply use that to log in, and get that free account. So I looked at two pairs. I looked at Euro USD and I looked at USD JPY, and we will look at that. We'll do analysis on that. I'm actually in this trade right now. Just let me make sure. Okay, it's looking good. All right. So we're gonna look at Euro USD. Make sure. All right. Nothing on that. And USD JPY.
Where's my money?
I already did that one, so let's get that off. So before we do the analysis, let me show you how to set up a broker so we can play with some Monopoly money, right? So there are a lot of different brokers to choose from when it comes to trading binary options. So you do the research and you use whichever broker speaks to you. For this overview, for this intro, I'm just going to show you how to set up Pocket Option because it's easy to set up and there's no cost associated with setting it up. Some of the brokers, you have to fund it first before you can create an account. This is in a way. Log out. Okay, so pocketoption.com. Let me copy and let me paste that for you here. Okay, there you go. So when you come to pocketoption.com, you're going to see this lovely island. Who doesn't want to get away to an island? Things are crazy right now, right? Nice little getaway, and I'm in the cold. Some warmth would do me well. All right, so pocketoption.com, you can log in a few ways. You can create the account with Facebook if you want, with Google, or you can use your email and create a password, right? Now, I would recommend using an email and creating a password if you think that you want to put your real dollars in and trade with real dollars. But for a demo, it's fine to do Facebook or Google because it's pretend. Um, and the reason being, remember a few months back, Facebook had the lockout, everything was all messed up with Facebook. You wouldn't like for your money to be associated with something that's had that kind of thing going on, right? That was crazy. So that's why I think that, it's your money. You want to secure it as best as possible. So take the time, use an email, and create your own password. So whatever option you choose, go ahead and do that if you're going to. And I will just go ahead and log in. I'm not a robot, so let me click that. All right. There we go. So is that what I wanted to do? No, that's not what I wanted to do. This is what I wanted to do. Demo. Okay. So when you create an account with Pocket Option, you're going to have $1,000. 1,000 demo dollars is what you'll have. And things should look like this. You'll have candles here, right? And you may see stocks here because you can trade different things, not only currencies. You can trade in this broker, you can trade stocks as well. So you click here and it would be on stocks. You're going to select currencies instead. Then it's on percentage. You want to change that from percentage to A to Z, because right now with percentage, it gives you the payout from highest payout percentage all the way to the lowest. But I like it to be alphabetical so that it will be easier for me to find whatever currency pair I'm looking for. So once you have that done, click outside the box, right? Now, these are candles we're looking at. The red candle represents bearish moves. Bearish means going down. So a red candle price opens at the top, closes at the bottom. The green candles are bullish. They open at the bottom and they close at the top. And you see it in action moving up, right? So that's bullish, that's bearish. So if you hear of a bullish idea, that means an idea for price to go up. A bearish idea, that's for price to go down. And see the green button here, higher, bullish. Red button, arrow down, lower, bearish. Now, there are 4 things you need to listen out for when it comes to taking a trade. One is the currency pair, and this is where you go to find that. So we said I'm going to analyze Euro USD. So you click here and it's alphabetical. So there's Euro USD, it's paying out 85%. So that's the nice payout right there. Click outside. So now I'm on the Euro USD chart, right? And so that's the first thing, the currency pair. Second thing is the time frame. I like to have it on 5 minutes for Pocket Option. But for this quick demo, I'm going to do a 1-minute trade, right? And just drop this down to $1 for now, right? So currency, time frame, the strike price. So strike price, here you see it says 1.13265, and it's changing because price is constantly moving. So when I call out the price, if it's for a bullish idea or for price to go up, you're going to need to get in at the price that I say or lower. So right now it says 260. It would be 260 or a lower price if I think price is going up. If we think price is going down, it would be 263 or higher. So when we want to go in for a bearish or a downward move, we want to get in as high as possible. When we want to get in for a bullish move to go up, we want to get in as low as possible. Are you still with me, Reggie?
Yeah, mm-hmm.
Yeah, makes sense?
It's sorting. I mean, some of it's sinking in.
Okay. All right. So let's just play a little game. All right.
Mhm.
Say, looking at this chart right now, Euro USD, do you think in the next minute price will keep going up or you think it's going to go down?
It may go up.
Up. So then I'd press that green button to go up, and price just needs to go up and stay up for the duration of the time. Let's see. You see this green line, it needs to stay above this line for that minute.
Okay.
Right now it's below. It needs to stay up by the time it gets to this vertical line. So let's see if that's going to happen. If it does, you'll get back the dollar plus the 85 cents profit because it's an 85% payout.
Oh.
So yeah, okay, it's
Uh-oh.
you're gonna owe me $1. Oh my gosh. Oh, you know what? I'm not even logged into my YouTube to see if anybody is commenting out there. Let me log in really quick.
I see three. Oh, I see. No, it's just the two of us. I was confusing the chat with the participants. So it's just us.
Yeah, I am. What's out there? Okay. Oh, Nakaya is here. Hey, Nakaya. Let me say hey. All right. That. So as we see, it didn't pan out. But if you look, you can clearly see there's a downtrend, right?
Yeah.
So I would have guessed going down. But guess what? This trading is not a guessing game. It's not gambling. A lot of people treat it that way and they have a negative experience. But let me show you how to, do how to look at the market, how we decide on what we're going to do. So Euro USD. Oh, okay, here. Euro USD, Euro USD. So we want to look for an idea going up, right? Even though we see things tanking right now, that's a pullback to turn around and go up, hopefully. Welcome, Usario. So before I do that, I just want to show you. So price moves in 3 different ways. It moves up, and that's considered an uptrend. Now, in that move up, price doesn't just move in a straight line like that. It moves more like this. That's more how price will move, right? So when getting in a trade, if it's an uptrend, you want to get in here, you want to get in here, you want to get in here. You never want to get in here because things may not work out the way you hope when you do that. You get in at the bottom, you get in, you make your profits that way, right? This is the pullback. You don't want to get in here. You wait until it pulls back, When it gets here, you get in again and you can ride it up here. You get in here and you ride it up here, right? Some people, they'll get in down here and they'll ride it out all the way up to secure major profits. Make sense?
Yeah,
Now, if you don't know what you're doing, you may get in here thinking that price is going to go up and then price goes down, you know, and then you do not clear that trade. So with a little education, you can avoid stuff like that. You know, it's trading is really not that difficult. It's just to understand certain things. So this is an uptrend. On the flip side, we also have price moving this way. That's the downtrend. And just like with the uptrend, with the downtrend, price is not just moving in a straight line like that. It's like this, down, 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 like that. So with this, you want to get in here. You want to get in here. You want to get in here, right? You get in here, you take it down here, you make your profits. You're not getting in on the pullback or you're losing that. You want to trade with the trend. You hear over and over, the trend is your friend. You want to trade with the trend, right? So that's the downtrend. But there's another way that price moves. We have these two lines. Price can also move like this. And when price moves this way, this is consolidation, or it's in a range, right? So when it's moving like this, you can buy when it's here. You can sell when it's here. You can buy when it's here. You can sell. So you can take both buys and sells in a consolidating market because price is just bouncing between 2 points. It's not going anywhere. Now, the next thing that you want to look out for is this doesn't go on forever. Eventually, it's going to break out. It's going to either break to the bottom or it will break to the top. When that happens, it breaks out. You want to get in when it does a retest to go to the upside, right? So if this happens, break and close, the retest, and then you can take it going to the upside, right? There's another thing that can happen. It could actually instead come down here. Then you, if it breaks here, break and close, then you'd want to wait for the retest and then you take it going down this way. So there are two things that can happen because it's never going to be consolidating forever. It's eventually going to break out either to the upside or the downside. And we don't know what the market is doing. We can only watch and then we can react. You can never be proactive because you don't decide what the market does. The market does what it does, and we just have to take cues from the market and just react to what the market is doing. Make sense?
Yeah.
Okay. All right. So with that being said, let us take a look at this market. And you want to ask a question?
Hopefully someone else might need it. But on, oh, you took off your diagram there. But on the way, or when you're jumping in either on the uptrend or the downtrend, I understand you're waiting for a retest.
Mm-hmm.
What would you say is a good indicator for you to know, okay, this is the time to get in? Because it can pull down and you might believe, okay, well, this area right here, now it's going to go back up. And as it kind of fakes you out, but still goes back down. You understand what I'm saying or no?
So you're saying it goes beyond where you think it retests, it comes back further?
Yes, essentially. So it stops at a certain point and you would be like, okay, now it looks like it's gonna go back up, but it actually doesn't go up. It moves in that direction for a second, but then it continues going further down.
Okay, because that's where price action comes in. And this is just an intro, so I'm not gonna go really in depth with that. But price action, you have to map out your zones, and based on the zones, you'll see, you sell the floor of a downtrend, you buy the roof of an uptrend, but you're gonna see different floors. All right, so let's just look at this. For instance, Euro USD on the day, we can mark up multiple floors. Let me change it to a line chart so you can see it a little clearly. So can we agree that we're in a downtrend with this? First and foremost, we're in a downtrend, right? We see prices going down. That's a downtrend. Yes,
Correct.
no?
Yes. Hear me?
Okay. All right, so since we're going down, we sell the floor of a downtrend, right? So I'd be marking up floors. So that's a floor. That's a floor. That's a floor. But now we see some kind of consolidation looking thing happening, right? So what do we see here? Break, close, retest. You see it?
So retest, it goes back up to the opposite markups. It not always, but essentially.
Yeah, so we're waiting to see price continue going down here, right? So this was the floor here, right? That's the floor. It broke. It retest. So the floor became the ceiling. You're always looking for the past floor to be the present ceiling to continue to the downside, right? That's all you're looking for. And it's not always going to be perfect like this. Oh, that hit the line. This hit the line perfectly. This came a little bit above. So it's like zones. You just have to have a zone, if it comes within the certain area that, okay, I can start looking in this area. And this is just looking at a clean chart, no indicators or anything. I kind of like it best this way. But yes, as you get more in depth with your studies, Usario, you'll understand price action more. It's all about price action. What I've learned when trading binary options, which is a time-based style of trading, if you're doing, say, 5-minute trades, 3-minute trades, looking to get in, you want to look at the areas of the 1 hour levels of support or resistance, depending on what direction you're going in. The hour and the 15 minutes are the strong areas. That's what I've been taught, and it seems to be true. So when I'm doing my markups, I start on the day and I work my way down, top-down analysis. The day, the hour, the 15 minutes, right? I mark the wick and body of the candle to the left of the current candle. So here we go. Wick and body. There's the body of the candle. There's the wick. Those lines are called the wick, and the candle, the meaty part is the body. So I put a line on the wick, I put a line on the body, and that's support. I mean, that's resistance, sorry. Resistance is on the top and the support is on the bottom or the floor. So the resistance or ceiling, that's on top, and support or the floor is on the bottom. So I've done that on the daily for not the green candle, which is the current candle. This candle is still being formed. This is today. I do it on yesterday's candle. This is the movement that happened yesterday. So I've done this candle. I'll drop down to the 1 hour and I'm gonna do the same thing. I'm gonna mark the wick. I like to do red for the hour. And then I drop down to the 15 minutes and I'm doing the same thing again. And I like to do orange, you know, those are the colors I like. Do that there. And we see that on the 15-minute, the day zone and the 15 coincide right here. So I'm just gonna make that neon yellow. Like, hey, that's a strong, that's a key zone right there, right? So, and so you see why I color coordinate. Black is the hour, red is the no, black is the day, red is the hour for me, and orange is the 15. And we know, and you should have paper and pen to write down the areas, you know, until you feel like you can just be like, oh yeah, I know what this is. This is the day and the 15. I don't have to write that down. That's just one thing, right? So now Euro USD, I said that we are in an uptrend. No, yes, I forget. Yep, we're in an uptrend. So I'm looking to get in for the buy and we missed the entry here. But do you see that? Price came here. Yeah, it pulled down a little bit, but there we go. I go on the 5 minutes for my entry. So yeah, this was an entry right here on the 15 minutes. 15 minutes and the hour are key zones when it comes to this style of trading that I'm doing. Now, if price pulls back again, I would be looking for it to come lower. So I would be actually be looking to see it come to 228. This 15 minutes / hour zone, that's where I would want to be looking to get in. So then I'd go to my broker. I'd make sure I'm on Euro USD. I like to have it on the line chart. So I'm going to change that. We're risking just 1% of our account. So $1,000, you're going to risk $10. You can go here and at that zero. Oh, never mind. There we go. $10, right? So we're risking $10. I'm going to change it to 5 minutes. I take 5-minute trades and pocket option. And the price that I said was 228. So we're waiting on price to come to 228 or lower for the buy. Now, let me just say today is January 5th. The banks who are the major players, they're just coming off of holiday. So the market is not really moving the best. So it may not come down here. but trading is all about patience. Like, it already came to this area, so I wouldn't be trying to take it at this area again. I would need to see it come down here for me to get in, 228 or lower. Um, let me just type that here. So Euro USD for bullish idea,
Thank you so much for the Christmas card.
Well, you're welcome.
Very nice.
low.
And you woke me up. I'm just dozing off.
Mhm. So that's what we'd be waiting on. 228 or lower.
Hmm.
And oh, that's basically it. So what we can do is we can set an alert here, just a little bit above it, right? We have a red candle. We need price to come all the way down here and we'd get in. Seeing that the Bollinger Band is here, price could actually turn around at 251. So with that being said, what some people can do, and I've done it from time to time, if I'm going to risk $10 and I think it may just turn around here, I'll split it up in 2 trades. Oftentimes I'll end up clearing both doing that, but I'm not risking more. I'm just splitting it up just in case it comes here and turns around instead of going all the way down here. I miss out on this, but then I wouldn't miss out on that. Or you can be disciplined and you say you're waiting on this, you wait on that, and nothing else will do. All right, so that is analyzing for a bullish idea. Next, I think it was USD JPY. We were looking at bearish or for a sell. So let me go here. Let me see the red candles. So we're just waiting on it to come down, right? So let me see what this is looking like anyway. Okay, this is looking good. Oh wait, no, I have no. This is looking good, right, Sterling? That's our trade. Anyway, USD JPY. So UJ, interesting. So now I'm looking at this. It's saying that so
What happened?
I love that I trade differently now.
No.
You're like, oh, fuck, that's like the old fuck.
Oh, no, I'm just reflecting.
Are you wearing your hand mask?
Yes.
Okay. All right, so I'm gonna do the same thing, marking up the levels of support and resistance on the day time frame for the previous day. There we go. On the hour. Nakaya and Sterling, they keep me posted, but even though I have the alert set anyway, just in case it comes to price. But if it comes to 251, that's a potential entry as well. So All right, so I'm looking at this and the super trend is this purple line and we see that it's below. So this UJ, even though the US dollar is weaker than the Japanese yen, we are definitely in an uptrend. Like I'm looking at it on the daily, that's an uptrend that we're in. So I would just forget about this one. See, uptrend. Purple line, it's below. It's an uptrend. This is something new that I'm learning now, to pay attention to the overall, the bigger picture, pay attention to what the banks are doing. That's how I can keep my money. If I trade in the direction that the banks, the hedge funds, all those people trade the way they're trading, it'll keep money in my pocket as opposed to keeping it out. So though based on currency strength, I'm supposed to be looking for downtrend. This is saying otherwise. So I'm just going to ignore this. So we're just gonna wait on, okay. What did it do? Price is just hanging out here. So the next thing I would look at is if price breaks out here, then I'd look for a pullback here. So things are just not moving that much right now. It's the week. We're just coming off of the holidays. So I think there was bank holiday on Monday for some places. It's only Wednesday. So some people are still, most traders are going to start trading next week. They're not really trading this week because there's not much movement. And you can see it. Things are not really moving. Like, hello, you know? So, but yeah, that's just to give you an idea of how we do the analysis. So we're not just guessing, we're actually doing markups, we're looking for price action. I need to see price come down here before I would jump into EU. Who knows, it could happen after I'm done with this call. It is 11:52, so I'm gonna be wrapping up in a second. But in closing, I just want to show you one last thing. You know, when you're doing anything, you need to have a plan. Like you don't just accidentally accomplish anything. There's planning and preparation that goes into it. And same thing with trading. You want to put time in, right? And have a plan set up. Now, you can use a compound calculator to help you put a plan together, right? You want to have a trading plan where you have an allotted amount that you want to make. You also need to know the amount that you're willing to lose, right? Because trading is investing, and investing does have loss. There are gains and there are losses. Here we like to call our losses lessons. So we use compound interest so that the gains can be greater than the losses. And that way, over time, you can grow your account. Now, when it comes to, oh, let me see. Great analysis and review for myself. Thank you. I'm glad that you like it. Yeah, I haven't done this in-depth breakdown of the charting in a while. So yeah, this is our first call for the new year. So remember I spoke about risk, you know, and targets. Well, say you start an account with $100 and you want to grow this money by, let's say, 8% every day. And you want to do this for 60 days. And for those 60 days, you're not going to pull anything out. You're going to reinvest 100% of whatever it is you earn. And we're not going to include weekends because the market is the market opens on a Sunday night, like 5 p.m. Eastern Standard Time. It opens then, it closes Friday, 5 p.m. Eastern Standard Time, right? So we're not going to include the weekends. Now, you may wonder why grow it by 8% a day? Why not 20%? You know, people do that. I'm just saying 8%. You grow it by however much you want to grow it. We know that if you put $100 in a bank account, you go back in 60 days, you're going to have less than $100 because you are not maintaining that minimum balance, right? I think 500 is the minimum balance. So they're going to charge you for not having $500. So, and if they do pay you for you letting them use your money, they're paying you less than 1%. So 8%, not bad, you know, but as a new person, 8% may be a bit ambitious. Start off with say 2 to 4%. That's a good target when you just start out trading. And over time, you can increase it to whatever you'd like, right? So now with this in play, how much will $100 grow to? Reggie, if you had to guess, how much do you think $100 would grow to? I muted you because
How about maybe, $25?
you you think it would grow to $125 over 60 days?
Well, it's a hope.
Okay. You know what? I totally understand why you would say that because we know it's so they're paying us pennies, right? So you
Right.
like, okay, but this is daily compounding. So actually, what it grows to is a little over 10,000, like $10,125.52. So $10,025.52 is what you would gain. Now, this is a calculator, so that's perfect math, right? So 10,000 is a little bit different than 125, right?
Yeah,
Right. But this is a calculator. This is perfect math. We are human beings. So, of course, there can be some error, right? So, but say you're half right and you get to $5,000. That's still phenomenal because we know what would happen if we put $100 in the bank account, right? But let's break it down to see how this can actually happen. See, 8% of $100 is $8. So on the first day, you just need to make $8 and then you can be done trading, right? Because that's you sticking to the plan. You make your $8 and you're done. And I know somebody who comes in and says they want to start investing and like, okay, make $8. And that's not gonna be like, what? $8? I came to invest. So I tell people, don't think of it in terms of the dollar amount. Think of it in terms of the percentage that you're able to make. Because 8% is 8%, you know, and where else can you make 8% every day? Or whatever percent you want to make. Where else can you do that every day if that's what you buckle down and do? So on day 2, now you have $108. So it's going to be 8% of $108, which is $8.64 that you need to make, right? So 64 cents more, like, wow, like that doesn't seem exciting, but you know, bear with me. By day 30, 8% is now $74.54. So it's still 8%, but it's following a trading plan, sticking to the plan, you know, and over time, this is what can happen. Even if you don't do it perfectly, uh, and you're making $50 instead, it's still growth, you know, something that you wouldn't be able to do otherwise. Like, where could you do that? And on the last day, 8% is now $750.04. So don't think about the dollar amount initially. Think about the percentage because this is based on starting with $100. But if you start with $500 or $1,000 or even $50, it's just going to be 8% of whatever that amount is. And that's how, with learning the skill and having a trading plan, people are able to accomplish goals and dreams that they never thought they were able to do before. In this pandemic, people been doing phenomenal things. But that's going to be it for the session today. Let's see. It never did quite it never did come down, but it's okay. That's what trading is all about. And remember, I said if it broke through here, we'd wait on the retest to this line to get in and go, you know? It's just a waiting thing. It's about being patient. Let's see, there's a question. Awesome job. Thank you. You're welcome. You're welcome. All right. So, with that being said, another winning Wednesday session in the books. Reggie, you have my email. If you want to get in touch with me after having seen this overview, we can do a one-on-one and talk. But yeah, I'm gonna say goodbye to everyone out there in YouTube. Thank you for joining me. If you're not live, you're catching the replay, please like, subscribe, comment.